You can earn money by investing in some stocks, and your investment will be successful if you have any idea or knowledge of how to invest and in which stock you have to invest. And if you don't know the best stock for investment, consider taking advice from the wisest person. And when we talk about investment, stocks, real estate, and earning money, we have only one name in mind: Warren Buffett. Berkshire Hathaway's famed investor and CEO has a sharp eye for value stocks set for growth. In recent months, he has been judiciously adding to stakes in companies he believes are cheap and have incredible upside potential. Just 7 stocks saw Buffett's ownership increases in the second quarter of 2023, according to Berkshire Hathaway's most recent 13F filing. Nevertheless, some of the finest Buffett stocks to buy right now probably go beyond these most recent acquisitions, considering how quickly market conditions can shift. In this video, we'll talk about 6 income-producing companies, sometimes called forever assets. These stocks produce dividends that might make you rich if you buy and keep them for the next 5 years. But before we start, make sure to subscribe to our channel, Financial Freedom, and press the bell icon to stay in touch. If you want to ask any questions, drop them in the comment section. So let's start the video with the number 1 stock, Berkshire Hathaway. Warren Buffett has a particular place in his heart for Berkshire Hathaway stock, as seen by his regular stock purchases in his business. Berkshire Hathaway's performance is outstanding and has a history of outperforming in 2023, demonstrating its unquestionable prowess. Amazingly, Berkshire repurchased shares for a large amount, topping $1.4 billion in the second quarter alone. Buffett believes Berkshire is undervalued and sees the company as a strong investment even at its current price. The conglomerate's financial strength is evident as it revealed operating results for the first half of 2023 of an astounding $71.4 billion. This financial triumph underscores the earning potential embedded in Berkshire's diversified businesses, such as GEICO, BNSF Railway, and its expansive manufacturing, service, and retail operations. Moreover, the colossal cash reserve of $147 billion positions Berkshire with an elephant gun, ready to seize lucrative opportunities in acquiring entire companies or making significant investments at favorable valuations. Under Buffett's guidance, Berkshire Hathaway remains an enduring force in long-term wealth accumulation. Capital One Financial, CEO. Among Warren Buffett's top 5 holdings, Capital One significantly increased Berkshire Hathaway's stake in the second quarter of 2023, moving it up to the top 25 of the conglomerate's holdings per recent regulatory filings. The Oracle of Omaha increased its stake by more than 25%, indicating strong support for the bank. Even though Buffett has been increasing his bullishness recently, Capital One is still a strong long-term investment because of its low price. Over the last 2 years, the stock's value has almost completely collapsed, and it is currently only trading at 8 times anticipated earnings. Despite prevailing anxieties surrounding the broader banking and financial sector, recent actions by the Federal Reserve to bolster banks earlier this year assuage some of these concerns. Capital One's robust second quarter earnings, surpassing estimates, and proactive cost-cutting measures to safeguard margins in a challenging economic climate add to its appeal. Coca-Cola. Coca-Cola is one of Warren Buffett's longest-lasting investments. Its low beta indicates its exceptional dependability. Warren Buffett's New England Asset Management showed confidence by adding to its holding of KO shares during the most recent quarter, even though Berkshire Hathaway chose not to. This consumer staples mainstay is expected to continue producing cash flow and paying dividends, making it a solid buy even during temporary selling pressure. Robust stats highlight Coca-Cola's remarkable performance in Q2 2023, which included an impressive 11% gain in organic revenue and an identical surge in earnings per share. Its growing worldwide market share shows that it has pricing power and is resistant to inflationary pressures. Offering a dividend yield of approximately 3.3%, Coca-Cola is less vulnerable to economic downturns than other sectors. Cisco, SYY. Cisco emerges as another gem in Warren Buffett's NAM portfolio, signaling a bullish outlook with a substantial 15% expansion of its position. Cisco's stock is still trading considerably below its pre-pandemic high, although it has lost about 20% of its value since then, making it a compelling place to buy. Due to possible short-term concerns brought on by inflationary pressures that could further compress margins, caution flags are raised. Nonetheless, investing in Cisco now could result in large long-term profits. J.P. Morgan Chase. During the chaotic waves of economic uncertainty, J.P. Morgan Chase maintains its position as a pillar of stability by standing tall among the world's financial titans. I have no doubts about this institution's tenacity, which is why it's included in the portfolios of both NAM and Berkshire Hathaway. Easily above market forecasts, J.P. Morgan Chase demonstrated its financial strength in the most recent quarter with an astounding $4.75 earnings per share on $41.31 billion in revenue. The bank's forward-looking approach is exemplified by an upward revision of its net interest income guidance for the full year 2023, now standing at approximately $87 billion. J.P. Morgan Chase fortified its CET1 capital ratio to 13.8%, bolstered by higher rates and a slower deposit repricing trajectory. It gained approval for a lower percent stress capital buffer requirement of 2.9%, effective from fourth quarter 2023. This strategic move positions the institution to return more capital to its shareholders. Even though J.P. Morgan Chase is aware of the uncertainty surrounding the economy, competition among depositors, and the impending implementation of Basel III regulations, the company is confident in its capacity to continue providing exceptional service under various circumstances. With its solid financial sheet and unmatched competitive position, the company is priced attractively, trading at about 10 times anticipated earnings, a reasonable value within its historical range. Given its ability to generate steady returns throughout market cycles, J.P. Morgan Chase is an attractive long-term investment option. In the current economic landscape, it is undoubtedly one of the best Warren Buffett stocks that begs to be considered. D.R. Horton. D.R. Horton presents a dichotomy of potential gains and inherent risks, particularly tethered to the undulating dynamics of the housing market. Given the unpredictability of the broader economic trajectory, my appraisal leans toward a prudent hold stance. With revenues of $9.73 billion, D.R. Horton exceeded market forecasts in the third quarter of fiscal 2023, with earnings per share of $3.90. The business is still in strong demand, as seen by the notable 10.7% rise in consolidated net sales orders from the previous year. Affordability issues brought about by rising mortgage rates have subdued the recent frenzy of demand. D.R. Horton's proactive approach is demonstrated by its adaptive response, which includes price reductions and increased buyer incentives. With its substantial moat, D.R. Horton appears well-positioned to adeptly capture market share profitably amidst the undulating tides of the housing market. However, the prevailing uncertainty mandates a cautious approach until greater clarity emerges regarding the economic landscape and the housing sector. Consequently, the current recommendation for DHI stock stands at a reasonable hold. Occidental Petroleum. In the same way, Occidental Petroleum is a speculative investment with the potential to rise in the next weeks, depending on how oil prices fluctuate. The range of possibilities depends on the economy's direction. Economists anticipate a soft landing, which would maintain high oil prices for a considerable time. On the other hand, a recessionary slump may bring about a significant 30% decline. Even in this risky environment, I continue to believe that this stock is worth holding for the long run due to the company's significant oil reserves and strong dividend payout. In the second quarter of 2023, Occidental reported adjusted earnings per share of $0.68, falling short of expectations. However, operational finesse shone through as total production surpassed guidance by 42,000 BOE per day. With the $425 million common share buyback in Q2, Occidental made headway toward its $3 billion repurchase program, which is already 40% finished. In addition, the company's dedication to increasing shareholder value is demonstrated by the redemption of $520 million in preferred equity. Occidental expects to continue paying out more than $4 per common share to shareholders when oil prices reach $75 per barrel or higher. Nevertheless, the share price is just 7 times earnings, which is a beautiful multiplication. Conclusion: Buffett's success history indicates that there might be more to this possibility than first appears. What are your thoughts on the current market trends? Share your insights in the comments below. For more valuable updates on achieving financial freedom, subscribe to our channel, Financial Freedom. Don't forget to press the bell icon for timely notifications. If you found this information helpful, share it with others. Thanks for watching.